Only 269 new homes were sold in the GTA last month, making it the worst January in the home building industry since 1981.
It's the spring of 2026, and something has happened in Canada's largest city that hasn't happened in over 30 years. Not a single new condo project launched in the Greater Toronto and Hamilton area during the entire first quarter of the year. Zero. None. Not one sales center opened its doors. Not one floor plan was unveiled. For the first time since the early 1990s, when Canada was clawing its way out of a brutal recession, Toronto went an entire quarter with no new launches. But here's what makes that silence so much more disturbing. The government had just delivered one of the biggest housing incentives in Canadian history. Bill C-4 had received royal assent in March 2026. A new first-time buyer GST rebate, worth up to $50,000, had finally cleared every legislative hurdle. And Ontario went even further, announcing a full 13% HST elimination on all new homes up to $1.5 million, effective April 1st. Up to $130,000 back in buyers' pockets. This was supposed to be the moment the market roared back to life. Instead, silence. Only 246 new condos sold in the GDHA in Q1 2026. That number is not a typo. 246 units in one of North America's largest metropolitan areas, down 52% from the year before, and nearly 94% below the 10-year average. The question isn't just why the market is struggling. The question is, why? Even after tax rebates, rate cuts, and government intervention on a historic scale, are buyers still walking away? If you've been watching this market, if you're a buyer, an investor, or someone who just wants to understand what is happening to Canadian real estate, stay with us. Because the answer is more complicated, more troubling, and more consequential than any headline has told you. And if this kind of deep dive housing content is what you come here for, hit subscribe. Drop your thoughts in the comments. We want to know, are you waiting to buy, or have you given up entirely? Let's get into it. To understand 2026, you have to go back about a decade. For most of the 2010s, buying a Toronto condo, especially pre-construction, felt less like a real estate transaction and more like printing money. The formula was simple. You put down a deposit. You waited 3 or 4 years for the building to be completed. And by the time you close, the unit was worth significantly more than you paid for it. Developers understood this, and they built their entire business model around it. A core insight in a Bank of Canada report published earlier this year laid it bare. Throughout the second half of the 2010s, condo developers were heavily dependent on short-term investors buying pre-sale units to earn a quick profit. Not families, not end users, investors. In some pre-construction projects, investor buyers accounted for more than half of all purchasers. Some estimates put that number even higher. The city's skyline was not being built for people to live in. It was being built as a financial instrument, and for a long time it worked brilliantly. Prices climbed. Rents climbed alongside them. The numbers seemed to justify everything. Tiny studio units, barely 400 square feet, were marketed as wealth-building tools. People bought multiple units. Some bought 5. Some bought 10. The logic was bulletproof. Toronto was growing, immigration was surging, and land was finite. Prices only went one direction. And then came 2022. The Bank of Canada began raising interest rates in March of 2022. What started as a cautious adjustment became the most aggressive rate hiking cycle in the central bank's modern history. In just over a year, the overnight rate went from near 0 to 5%. For condo investors, many of whom had purchased pre-construction units with relatively thin deposits and the expectation of flipping on closing, this was catastrophic. The math had completely reversed. Units that had been purchased for $700,000 were now closing into a market where similar resale units were selling for $600,000. Investors were being asked to close on properties that were already underwater. Monthly carrying costs, mortgage payments, condo fees, property taxes, were bleeding thousands of dollars every single month beyond what rents could cover. And so a wave of assignment sales hit the market. Investors desperately trying to sell their right to purchase a unit before closing to avoid the loss. But the buyers weren't there. Nobody wanted to inherit someone else's overpriced, underwater pre-construction deal. Some investors didn't make it. Defaults rose. Insolvencies in the development sector multiplied. In 2025 alone, developers canceled 28 condo projects representing over 7,000 units. Not delays. Cancellations. Those homes will never be built. By early 2026, according to data from TREB, GTA condo prices had fallen nearly 30% from their 2022 peak. In some buildings, units were trading at levels not seen since 2021. The era of guaranteed condo wealth was over, so the government moved, and it moved big. Bill C-4, tabled in June 2025 and given royal assent in March 2026, introduced a new Gulf Standard Time/Hawaii Standard Time rebate specifically for first-time home buyers. On new condos valued up to $1 million, the full federal GST component would be eliminated, a potential saving of roughly $50,000. The agreement had to be signed on or after March 20th, 2025, and the program runs through to 2031. Then Ontario went further still. Premier Ford's government announced the elimination of the provincial HST component on all new homes, not just first-time buyers, everyone. On homes up to $1.5 million, the combined rebate, up to $130,000, effective April 1st, 2026. On paper, this was seismic. The Toronto Regional Real Estate Board called a major step forward. Urbanation President Sean Hildebrand suggested the rebate could cut the price gap between new condos and resale units by roughly 20 percentage points, narrowing a spread that had ballooned to an uncomfortable 40% or more. And yet, the first full quarter after the announcement, Q1 2026, saw only 246 new condo sales. Urbanation reported a record 4,295 completed but unsold units as of that quarter, more than double the level a year earlier, nearly 5 times the level from 2 years ago. At the pace units were selling, that represented 92 months of supply. 92 months, nearly 8 years. So why aren't buyers coming back? Even with $100,000 savings being handed to them? Here's what the rebate numbers don't capture. Psychology. Markets don't just run on math. They run on confidence. And confidence, once broken, takes far longer to rebuild than any government program can mandate. Buyers have watched their neighbors lose money. They've watched investors get trapped. They've watched assignment sales fail to find takers. They've watched developers go insolvent. And every one of those stories planted the same seed of doubt. What if prices fall further? TD Economics, as of early 2026, was projecting condo prices to fall an additional 6 to 7% through the year, with a further decline possible into 2027. When credible major bank economists are still forecasting price drops, even after all the intervention, even after the rebates, even after 5 Bank of Canada rate cuts, buyers feel entirely rational staying on the sidelines. This is what economists call a wait-and-see dynamic, and it becomes self-reinforcing. The longer buyers wait, the lower prices drift. The lower prices drift, the more buyers feel justified in waiting. The more buyers wait, the more inventory piles up. And the more inventory piles up, the more nervous sellers become, lowering prices further still. The FOMO that defined a decade of Toronto condo buying, the fear of missing out, the panic of being priced out forever, has been replaced by something entirely different. Fear of being left holding a depreciating asset. There's another layer to this story that gets far too little attention. The product itself. During the speculative boom years, developers optimized their buildings for investors, not families. The result was a proliferation of micro-units, bachelor suites and one-bedroom apartments barely large enough to comfortably house one person. These units penciled out beautifully as rental income investments during the low-rate era. But as actual homes for actual people, they don't work. Canada's immigration patterns have shifted. The composition of newcomers has changed. The government has significantly adjusted its immigration targets in response to public pressure around housing affordability. And while population growth has slowed, the mismatch between the available condo stock, hundreds of thousands of sub-600 square foot units, and the actual housing needs of families, couples, and growing households has never been more glaring. The oversupply isn't just a quantity problem. It's a quality and fit problem. Meanwhile, construction costs have never been higher. Labor costs are elevated. Materials remain expensive. Development charges imposed by municipalities add tens of thousands to the cost of every unit before a single brick is laid. Developers find themselves in an almost impossible position. They cannot lower prices enough to meet the market without destroying their margins, their financing covenants, and in some cases, their entire business. So the standoff continues. Buyers won't pay asking. Developers won't or can't cut deep enough. And the market freezes. Here is where the story takes a genuinely alarming turn. The same market collapse that is currently giving buyers leverage, the collapsed demand, the rising inventory, the falling prices, is simultaneously destroying the future supply of housing that the city desperately needs. Construction starts in the GTA have fallen to levels that market analysts describe in apocalyptic terms. Urbanation's projections show completed new condo units dropping from nearly 30,000 annually in 2024 and 2025 to just over 21,000 in 2026, and then cratering to roughly 13,000 by 2028, with barely 2,000 completions penciled in for 2029. Let that land for a moment. From 30,000 completions annually to 2,000 in the space of 4 years. Benjamin Tao, the deputy chief economist at CIBC, has described the market as frozen. A necessary shock to the system, yes, but one with consequences that extend far beyond the current correction. The developers who are going insolvent today are not coming back. The projects that were canceled are not being rescheduled. The land that was acquired at peak prices, written down and quietly shelved, that housing pipeline has been destroyed. Toronto entered the 2020s with a housing shortage. It is about to exit this decade with a housing shortage that could make the previous one look manageable. RBC Economics, in its autumn 2025 analysis, projected that conditions could begin improving in the second half of 2026, with more meaningful recovery in 2027. But economists were clear. Any recovery will be slow. The trust, the capital, the developer appetite, these things take years to rebuild. So where does that leave us? Urbanation's Sean Hildebrand, one of the most respected analysts in this market, has said what very few people in real estate are willing to say out loud. It is probably safe to say we've hit the bottom for sales. The market, he argued, essentially cannot go lower in terms of transaction volume. You cannot sell fewer condos and almost zero. But bottom in sales does not mean bottom in prices. And it certainly doesn't mean recovery. The inventory is real. The carrying costs are real. The developer distress is real. And the psychological damage, the shattered confidence of a generation of condo investors who watched this market erode their wealth over 4 consecutive years of price declines. That damage does not heal on a politician's timeline. What Bill C-4 and the HST elimination represent is the most significant government intervention in Canadian new housing in a generation. The question that every buyer, every seller, every developer, and every economist in this country is now asking is deceptively simple. Is it enough? The rebate is real. $130,000 is not nothing. For a genuine first-time buyer with stable employment and a long-time horizon, this may be the single best buying opportunity Toronto has seen in a decade. The choice is enormous. The prices are down. The incentives are historic. The competition is gone.